and you see how we've done it. So the main thing, so we're going to record this big chunk, and then I'll slice it up into little bits and then release them. So
Okay.
I'll do a general intro that kind of we'll use before each segment.
Okay.
Hi, good morning or good afternoon, depending where you are. My name is Derren Joseph from Tax. We're the team that seeks to demystify the sometimes confusing world of international tax compliance, particularly for those who may be US exposed. Have a look at our website. We have over 2,000 articles on our YouTube channel. We have over 1,000 videos that speak to different aspects of international tax for those of you who live that international lifestyle. Today, we're joined by the one and only international tax badass, Mr. Jimmy Sexton, an international tax lawyer who is based in Dubai. Jimmy, how are you today?
I'm good. I'm good. Just one clarification. I'm actually not a lawyer. I have
Okay.
my LL.M, but I'm an international tax advisor. Just to make sure that's clear.
Gotcha. Thank you very much for that clarification. And Wendy, when you're doing the daily stuff, you can probably use that intro for each part. So what we have today are a series of not questions, but in what I think to be interesting topics. So without further ado, we could probably just jump right in. The first one, this is, I mean, the audience is largely English speaking and primarily based in the US, naturally the biggest English speaking audience, right? So for those who may be in the US and they're considering living that international lifestyle, what are the categories of people that you think could benefit from it?
Well, I mean, look, I think there's a lot of different people that can benefit from it. I mean, I think certainly, you have people that would just like to live in a different country and sort of experience what that's like, the culture, the food, everything that's different. I think certainly where it becomes very interesting is with people that can work remotely, like digital nomads. It gives you a lot of flexibility. Especially if you're under the foreign earned income exclusion to move around and not be considered a foreign resident for US tax purposes. And I know that there's also a lot of people in recent years looking to take advantage of a lower cost of living. I mean, both people who are considering retiring abroad, maybe in South America or in some European countries like Portugal, for example, where medical care and the cost of living and everything is much lower and of high quality. And then I think also a lot of families would like their families to experience living in a different country and also take advantage potentially of lower cost of living.
Okay, so in terms of that segment, from my understanding, your practice really focuses on the higher net worth individual and families. Is that a fair statement to make?
Yes.
And okay, so then the question becomes like, what is a high net worth individual? What does that mean in your context? Yeah.
So I think most of so I think that normally a high net worth individual is defined as somebody with $1 million plus in investable assets. I think in today's day and age, I think 5 million in investable assets is probably a better categorization. And then of course you have the ultra high net worth individuals that I would say are probably 30 million plus.
Sorry, my Wi-Fi signal jumped from one to another. Sorry about that. Could you repeat that again, please?
Yeah, sure. So I was saying, I think the typical definition of a high net worth individual has been somebody who has investable assets of $1 million or more. I think that's changed a little bit with inflation and cost of living increases and things like that. I would say a better definition is probably investable assets of 5 million or more for a high net worth individual. And then of course you have the ultra high net worth individuals, which I would say are probably 25 or 30 million plus of investable assets.
Okay, understood. And in terms of there's demographics, generally speaking, now stepping back from your practice, but relying on your understanding and your appreciation of trends and observations, like what is the faster growing segment? Is it with the nomads? Is it with the high net worth individuals? Is it the retirees? Or is it like all moving consistently?
No, I would say where I'm seeing the trends is probably, I think the biggest growth is probably in digital nomads, because I think
Um,
that they
mm,
can probably benefit the most, right? I mean, most digital nomads are service providers or remote
mhm,
workers that are
mhm,
making less than the foreign earned income exclusion and housing exclusion.
mhm, mhm,
And so that they can really earn a lot of their income, if not all their income, tax free. It becomes
mhm,
a lot more difficult for an American high net worth individual, ultra high net worth individual to really
mhm,
benefit from sort of tax advantage residency programs and stuff like that, because their income is going to likely be far above the foreign earned income exclusion. So they're probably not going to get a lot of tax benefit from it. I think when
mhm,
you look at the high net worth and ultra high net worth segments, I think their motivations for moving abroad are usually quality of life and business considerations, right? There might be more business opportunity in other parts of the world, alternative investments that might not be available in the United States.
mhm,
Um, Things they want their children to experience that maybe they want their kids to grow up in Europe or something like that.
mhm.
And then
Okay.
I'm
Mm,
also seeing, more and more Americans wanting to retire abroad, not
mm,
necessarily because of any tax benefits, because they're mostly receiving pension and social security income, which wouldn't qualify for the foreign earned income exclusion anyway.
mhm.
But they do have a lower cost of living available to them in many foreign countries, and so they can retire with a much higher quality of life than they could in the United States.
Yeah, and I'm seeing that as well for many of our clients. The fear of medical bankruptcy it's real, right? So
For
they're
sure.
looking at jurisdictions where they can be afforded the high level of healthcare, but at an affordable price. So yeah, definitely.
Absolutely. And I mean, especially when you look at a lot of the European countries that have socialized medicine, if they
Mm-hmm,
become tax resident there and start paying into the system, they have access to that, which is obviously is a huge advantage for people who are in retirement and aging and probably
hmm.
having increased health problems.
Okay, cool. Next question. What are your thoughts? I mean, so we're talking about those trends that are leading people to look elsewhere, look outside of the US. So what are your thoughts on the future of the US? I'm asking that because some of the other, I guess, practitioners in our ecosystem, they tend to be quite doom and gloom. The world's going to come to an end. You need to leave while you can, that sort of thing. But I know that your perspective is a bit more nuanced and balanced than that. You going to share your thoughts?
I mean, look, I
Uh,
think that it's a mistake to bet against the United States, right? I mean,
yeah.
every time something happens and you think the U.S. is down and out and this
Mhm,
is the end, they pull off a miracle, right? And I
mhm,
think that one of the things that the U.S. has to offer that no other country has, and this is something I actually had this conversation on Friday night having dinner with a friend who's an American, is that America's the probably the most innovative business forward country in the world, right? I mean,
mhm,
it's probably the only place I've been where if you sit around a table with a group of strangers and start talking
mhm.
about a business idea, everybody's like,
Yeah.
oh yeah, I think that's a great idea, how can I help? Oh, I know this
Mhm,
guy you need to talk to. I mean, it's just very centered around business, and people want to help each other, they want to see other people succeed. And I think also in terms of like, raising capital for a business or exiting a business or something like that, there's no country like the United States.
mhm,
And it does have a lot of, economic influence around the world. It's also a huge marketplace. So
mhm,
I think betting against the US is a mistake. I mean, certainly
mhm.
it's, getting more expensive and things can become more difficult in the lower income brackets, but I'm definitely not doom and gloom on the United States.
Okay. All right. So, in other words, you're saying you're optimistic as to the future. So it's not necessarily about running away or escaping the United States, but perhaps including other jurisdictions in your lifestyle, as opposed to just shutting a door and burning a bridge and running away.
Yeah, I mean, look, I mean,
Mhm.
everybody has sort of a different situation, right? So you
Yeah.
need to analyze it
Mhm,
on a case by case basis.
mhm,
But I'm definitely not seeing the U.S. crumbling, and you need to run away from it. But
Yeah.
I do think, when you start thinking about your financial health and asset protection and all that stuff, I think incorporating other countries is always intelligent. And also, let's not forget that there's a lot of opportunity outside the United States. I mean, not just in business, but also, I mean, even in investing in stock markets and in bond markets and stuff like that outside the United States. There's a lot of opportunity there that shouldn't be ignored.
Understood. And I guess you kind of touched on it, but for those who may be outside of the US, so non-Americans, I mean, you touched on the key advantage, but what type of entrepreneur or, potential business owner or existing business owner you think is best fitted to, to the United States that could really benefit from, if not moving to the US, but incorporating the US into their own international perspective as well?
Well, I mean, I think there's a couple different categories. I mean, one is if you have a business, outside of the United States. I mean, the US is a market that should not be ignored, right? I mean, it's 300 and some odd million people. It's a huge market, and you just can't ignore it. I also think, for a lot of foreigners, and I mean, this is something that I come across in my business quite a lot, is you have people starting new businesses where they're looking to a future exit, right? They want to build it up, they want to scale it, and then they want to sell it. Well, there's no easier place than the United States to raise capital. And if you're looking for an exit, the US is probably going to be the easiest place to do that. And usually if you're looking for, if you're looking down the road to potentially get acquired by a US company, which is, fairly likely the case, US companies like to buy other US companies, right? Because they understand the regulatory framework, they understand the laws, they're comfortable with the judicial system. And so I think for anybody in business, the US shouldn't be ignored. I think there's also another, probably less known category of non-resident alien where the US becomes very attractive. And that is, there's also a lot of non-US digital nomads, right? And they would like to do business through some type of an entity. And so typically that has been done through some sort of an offshore entity, right? In a no tax jurisdiction. But one of the things that I think is often overlooked is the US LLC, right? I mean, the US LLC is a disregarded entity by default, meaning if it has a single owner, it's disregarded for tax purposes. So if you have a digital nomad providing services, they could provide those services through a US LLC. And as long as they're providing those services from outside the United States and they don't have any premises in the US, there's going to be no US taxes, right? So that's also fairly attractive.
Yeah, and of course that gives you access to US banking, potentially payment platforms, feeling more comfortable with a US entity as opposed to a foreign one. And from 100%. A marketing point of view, potential clients, if they see that your business is US, they feel a bit more comfortable. Yeah, so
it gives you a lot of legitimacy compared to other jurisdictions, right? I mean, everybody internationally feels pretty comfortable doing business with a US entity. And like you said, banking has become such an issue over the past several years that being able to access banking in the US, I think, is a huge advantage. I mean, opening bank accounts in the US is probably easier than anywhere else in the world.
And you mentioned in some of your initial thoughts, the US participation exemption. Do you want to say a few words on that?
Yeah, so I think, one of the things that was really interesting with the United States is the US used to have a tax regime before the Tax Cuts and Jobs Act in 2017, where if you had a US company that received dividends from a foreign subsidiary, those dividends were fully taxed in the United States, right? Which was one of the big reasons why so many of the large companies, I mean, Apple was really famous for it, so was Amazon, for keeping all of these profits outside of the United States and not paying taxes on them, or paying very low taxes on them. Well, one of the things that shifted with the Tax Cuts and Jobs Act is that the US implemented what's known as a participation exemption regime. And this is a pretty common regime throughout the world. I mean, most European countries have a participation exemption. And essentially what that means is, in the case of the US, if you have a US company that receives dividends from a 10% or more owned subsidiary, those come in tax-free, right? And so a lot of times when you looked at international groups that were considering a location for a holding company, the US was out, right? Because those
Mhm,
dividends that were coming into the holding company would be taxed. Now that shifted, and the US has actually become a fairly popular holding company jurisdiction because you
mhm,
can repatriate all those dividends to the United States completely tax-free. And that certainly made the US much more attractive. And you've even seen some groups unwind their international structures in favor of US
mhm.
holding companies because of that tax savings that can be gotten through the participation exemption.
Gotcha, gotcha. And in some sectors, again, seeking to get your perspective, when people talk about the Tax Cut and Jobs Act from 2017, a bit negative, and they focus on guilty and additional layers of complexity that some business owners may face. But you sound, on balance, a bit more optimistic. So, are you optimistic in your assessment of the impact generally, at least within your ecosystem, or pessimistic or neutral?
No, I mean, look,
Uh,
I mean, I think it depends, but I guess I would be more optimistic, right? I mean, yes, you do have guilty, which has created a lot of complexity, and
mhm,
it has created an additional layer of tax for people that may have been conducting business through companies in zero tax jurisdictions. But
mhm,
if you look at, for example, subsidiaries of a U.S. company that might have subsidiaries in Europe, right? Where they're,
mhm,
I think the average corporate tax rate in Europe is about 24%. And
mhm,
so, if you look at guilty and subpart F, you
mhm,
have what they call the high tax exception, right? Which means
mhm,
if you're paying at least 90% of the U.S. corporate income tax rate somewhere else, then you
mhm,
get exempted from guilty, right? And I think that's
mhm.
U.S. corporate tax rate is 21%. I think 90%
Mhm.
is like 19.6%, if I
About
remember.
yeah,
So as
yeah.
long as you're
Mhm,
subject to taxes above 19 points, your foreign subsidiaries are subject to taxes above 19.6%, guilty
mhm,
and subpart F don't really play a role, right? They're not an
mhm,
issue. You're kind of excluded from them.
mhm.
Um, so I think given some of those tax rules, the impact is not quite as great as it would seem on the surface.
Okay, gotcha. Thanks for that. Moving on to, you spoke about nomads earlier, and I think a popular concept within the nomad ecosystem is the idea of flag theory. And for those who may not be too familiar with it, I think the term was coined in the 1950s, I think, by a guy called Harry Schultz. And since, he initially premised it on the idea of diversifying your lifestyle, he spoke about five flags: where your citizenship is, where you reside, which would be a different jurisdiction from your citizenship, where you hold your wealth, where you operate your company, where you entertain yourself. So initially five flags, but it's not dogmatic. Some people have expanded it to 6, 7, or 8 flags with crypto and stuff like that rolled in. What are your thoughts on flag theory?
Well, I mean, I think in general, I would say I'm in favor of it, right? I
Mhm,
think the whole premise behind flag theory is,
mhm,
you kind of want to decentralize everything. You kind of want to
mhm,
have where you live be different from where you're a citizen, from where you hold your assets, from where your businesses are. And that makes a lot of
mhm,
sense in
mhm,
diversification, right? I mean, if you live in one, if you have everything in one country, right? You live there, you're a
mhm,
citizen of there, all your savings is there, your business is
mhm,
there, everything is there. If you get sued or war breaks out in that country or something happens, you have all your eggs in one basket, right? And so I think the idea with
mhm,
flag theory is you sort of spread this stuff out a little bit and
mhm,
you're minimizing the risk. And I think that overall that's a very good idea. I mean, I don't necessarily subscribe to the notion that you get a lot of benefit of being a citizen of one country and a resident of another country. I don't really see the
mhm,
asset protection value in that, but I
mhm,
do
mhm,
definitely see the value of having, banking in one jurisdiction. Maybe you have your entities incorporated under the laws of another jurisdiction. Maybe you have investments in another jurisdiction. I
mhm,
definitely do feel that adds a lot of value. I think
mhm.
one of the things that you have to be a little bit careful of is I think some people take flag theory to the extreme and they
Yeah.
really break things up a lot,
Mhm.
right? And
Yeah.
by doing so, you add a lot of administrative burden and a lot of cost, right? I mean,
Mhm,
every company you open, every trust you open, every banking
mhm,
relationship you open, every residency you get, everything that adds an additional cost, additional requirements, additional administrative burden. And I've just seen situations where people have taken it to such an extreme that it's almost half their life has been managing their flag theory because how it's set up, right? So I think there is a bit of a balance there, but overall I think the strategy's spot on.
Right. But having said that, and bearing in mind your optimism on the US economy, right? Is there like less of an advantage to the average American as opposed to someone from somewhere else in the world? Because yes, we've had in the US some challenges with the banking system, particularly earlier this year, but it's noteworthy that nobody lost money, right? The Fed, the government made them whole. So, in terms of banking and another thing that I point out, we have something like probably 2 or 3 clients coming to us each month with expatriation on their mind, or who are going to carry it all the way through. So that is giving up their US passport or green card. And one thing we point out, and we give them cases, from just our experience, where having that US passport and having the air of the US embassy has literally saved lives. Given that, do you think for the average US person, there is less of an incentive to embrace flag theory than otherwise?
I mean, I think one of the big, I think for an average American, flag theory can be a little bit cost prohibitive, because as soon as you start opening up foreign bank accounts and foreign trusts and foreign companies and all of this stuff, one, the complexity of how those things are taxed becomes extremely complex. And as you know, there's a ton of reporting that needs to go on, right? I mean, all the different information reporting and all that stuff that needs to be done. And the consequences of getting it wrong comes with high penalties, right? And I think one of the things that you also have to keep in mind is, even if you're doing it right, if you were to get audited, it's going to be a complex audit that's also going to be very costly. And I think now the IRS got this, additional new funding. They want to hire 87,000 new people. And I think that they're going to be auditing a lot of people. And I think a lot of the audits that they do might not even be justified, right? I think they're going to start picking, they've promised to go after high net worth individuals because they seem to believe that they're all tax cheats, which I don't think is the case, but I think it's good marketing. And so I think they're going to be picking returns that fit certain criteria. And so I think high net worth individuals that have things overseas fits the bill for exactly what they want to be auditing, right? And so you also have that increased compliance risk, potentially an increased audit risk. So I think for the average American, it might not make economic sense. That being said, though, I've also seen a situation. I mean, I remember a situation probably 15 years ago or so, where I had a client, it was a US client, had a US company, and the IRS accidentally levied his corporate bank account and cleaned it out. Right.
Wow.
And so, and he had most of his money in the corporate bank account. The IRS cleaned it out. He bounced his checks for payroll, for rent, for everything else. I mean, the IRS eventually returned the money because it was a wrongful levy, but it doesn't change the fact that it caused him some significant economic harm and some reputational harm, right? I mean, paychecks were bouncing, rent checks were bouncing. Now, had that money, some of the reserve money, not been in that corporate account and been in an account overseas held within a foreign trust or something like that, that wouldn't have happened. So I think that there is value in it, but it has to be weighed against the compliance risk and the additional cost and administrative burden of administering flag theory.
And closely connected to the idea of flag theory, at least in some discussions, is the idea of being a perpetual nomad. What are your thoughts on that?
I mean, I think being a perpetual nomad has become a little bit more difficult in terms of practicality, right? I mean, a lot of countries, I mean, especially when you look at banking, right? So banking, a lot of banks nowadays want to know, where are you tax resident? So if you're, just because a lot of people don't realize that having residency, which is the legal right to reside somewhere, is not the same thing as being a tax resident somewhere, right? Like if you take the UAE, for example, as long as you have a visa, you're a legal resident, but you're not a tax resident unless you spend 90 days a year there and meet a few other requirements. So a lot of banks nowadays want to know where you're tax resident, and they want to see proof that you're a tax resident. So being a perpetual nomad causes some complication with that. It can also cause some complication with obtaining visas for certain countries, right? The US potentially being one of them. Like I've seen situations where people have expatriated and their second passport was not a passport that offered visa waiver, so they needed to obtain a US visa. But because they couldn't prove that they were firmly resettled somewhere and really had roots there, the US denied them the visa, right? So, and other countries can work the same way. So I think you really have to look at how that works practically these days. I think that it's going to become more and more difficult to be a perpetual nomad going forward as banks and tax authorities and everything want to see that you're, that you're really rooted somewhere. I think the other potential risk is, if you're not, let's say, a tax resident anywhere, every country has its own residency rules, right? I mean, it's not only, okay, you spend more than 6 months, you're a tax resident. It can also be you have an abode there. It's where you spend the most time. It's where you do this. So you also run the risk that if you don't have a firm residence somewhere, that some country may pop up at some point and say, well, if you're not a tax resident anyway, we're going to try to make you a tax resident here.
Yeah, absolutely. And the other four big English-speaking countries, so excluding the US, so that'll be Canada, UK, Australia, New Zealand, and that is indeed the case. In many cases, you have to demonstrate that you are bona fide tax resident somewhere else, otherwise fallback rules would apply. And some of the European countries as well, for example, I think Italy and but the banking is real, and just like you said, it's becoming more and more common. We have clients in Southeast Asia, which is where we're more based, that have serious problems when they try to repatriate money or they want to move back to the European country of origin or back to Canada or whatever. If they've been moving around Southeast Asia, living that nomad lifestyle, and therefore they may not have been filing tax returns. So there's no, what the bank back in Europe is telling, we have no way of verifying that this money is legitimate.
For sure.
So, so therefore, even though we know you were born here, you had this bank account since you were 17 years old, it goes into a suspense account and then they push it back because it doesn't pass the AML, test, anti-money laundering test. So it is real, the banking concerns.
The banking concerns are real, right? And I mean, without banking, you can't do anything.
Exactly. Okay. And when you decide, hey, I want to leave my country of origin, how do you determine where to go? I mean, then the world is your oyster, right? Obviously that's a wide open question, but what are your personal thoughts?
Well, I mean, look, I think that there's some analysis that needs to go into it, and a lot of things you need to consider, right? I mean, you need to look at, okay, what type of lifestyle am I looking at? What kind of environment do I want to be in, right? Do I want to be on a beach? Do I want to be on an island? Do I want to be in let's say a European country? Do I want to be in the mountains? And then you need to look at what things you need out of a country, right? I mean, what sort of business environment do you need? What sort of healthcare or safety do you need? And then also, if you're looking at it from a tax perspective, what type of income are you going to be earning? How is that country going to tax it? Are there potential inheritance taxes? Are there potential wealth taxes? So I think that there's a lot of things, what kind of, how important is safety to you, right? I mean, so I think these are all kind of things that you need to consider when thinking about where to go, right?
Yeah, and for us, we have like two categories of clients: those who say, well, you know what, I want to move to Europe, or specifically Southern Europe, and then we could perhaps model Spain versus Portugal versus Italy, what works best for them, at least from a tax perspective. But when we have clients that say, well, you know what, I can go anywhere, where should I go? I get a bit gun shy because invariably there'll be buyer's remorse, right? If you have not physically jumped on a plane and seen and experienced it for yourself. So one can paint you the most beautiful picture, but with the greatest amount of detail. But unless
Yeah,
you verified it and seen that it works personally for you, I, you know, I
100%.
yeah, so we kind of push back on clients like that. But of course, both types walk in the door, right?
And I mean, I think one of the other very important considerations that people oftentimes, unfortunately, gloss over is, how does their family feel about it? Where does their family
Yeah.
want to be? How are their kids
Hmm.
going to do in school? What,
Hmm.
what's the spouse going to do if you take them out of their social network?
Hmm.
Where do they want to be? And I mean, that's also a very big consideration that I feel like a lot of people sort of don't give enough consideration to.
Yeah, and I remember back in business school, they said that for expatriate assignments, that's the number one reasons for expat assignment failure,
Yeah.
when your family is unhappy. So
Yeah.
that is definitely a key move to make, thing to consider. Next question. Oh, well, now we could talk about you personally. So
Sure.
you were in the US and you moved to the UAE, Dubai. And
Yeah.
I'm being very specific in that because I was looking at another podcast and people didn't understand that Dubai was in the UAE. So just being
Yeah,
very
that's
specific.
true.
What made you make that decision? What were your factors?
So I was living between, I was living in the US. I was spending quite a bit of time in Europe on business, and I was also
Mhm.
spending a decent amount of time in the Middle East on business, but I'd never been to the UAE. And I was actually invited to a New Year's party there back
Mhm.
in 2014. And I decided, I've never been, I'll go check it out. And I was just blown away by the place. I mean, I just
Uh,
really fell in love with it. And I was only there a week, but I loved it.
mm,
And by the end of the week, I
yeah.
was like, I'm moving here. And so the next
Mm,
year I went there and started
mm,
spending some time there, set up a company, got my
mhm,
residency permit and all that kind of
mm,
stuff. And I've been there 8 years now, and I really enjoy it. And
mhm,
so
mm,
it was sort of an impulse decision, but it checks a lot of boxes, especially
mhm,
for my lifestyle. I mean, most of my business is in Europe, so it's
mhm,
only, depending on where you're going, is like 5 to 7 hour flight, depending on where you're going in Europe.
mhm,
Um, you got to fly on a luxury airline, which is nice.
mm. Yeah,
The time zone is very convenient if you're dealing
yeah.
with Asia or Europe. It's not difficult to get people to come travel to see you, because I know
Mm,
most people don't mind coming to Dubai. And so now that I've been there a while, I love the quality of life there. I've really come to appreciate the safety and
mm,
the convenience of everything. It kind of reminds me a lot of America, right? Everything's, in Europe, things close Sunday, things close
yeah,
early. It's not
yeah,
so convenient. Dubai is just like the US, right? It's 24/7.
yeah.
Everything's going. It's very
Mm.
business oriented. So I feel very comfortable there. I like it a lot.
Right. So 2014, 2015. So it's gone in, peaks and troughs, right? So the
For sure.
latest, my perception is that the latest upswing in the popularity of Dubai as a jurisdiction really came around COVID. It was the only international city that was open. Everywhere else was closed. And it
Yep.
was open for business, and then it just kind of got a voice of its own. But having said that, some people that we talk to, I mean, they're enjoying it for now, but they're not too optimistic on the future. They have questions about sustainability, viability of the economic model. What are your thoughts on the future of Dubai? I mean, I know you're not nobody's psychic, but what are your personal thoughts?
I mean, look, I'm pretty bullish on Dubai. So my read is
Mhm.
this. I was there when COVID hit. And it was
Yeah.
it was a pretty harsh lockdown when it
Hmm.
first came. But
Hmm.
once they kind of started to figure things out, they eased the rules. As you said, they
Hmm.
opened up in July of 2020. You could travel in and out, and I mean, they pretty much stayed open from July 2020 until now. And then the restrictions kept getting easier and easier. So I think they managed COVID very well. And one of the
Hmm.
things that I saw, and then this is kind of where my bullishness came from, is when COVID first hit, I was like, that's it, it's game over for the UAE, right? I mean, there was so many people leaving, there was so many
Yeah.
people moving out, so many businesses laying people off and getting rid of employees. But then when they reopened, and people saw how they were handling the pandemic, and I think especially when you look at Europe and a lot of the bailouts that were done by governments here, I think a lot of the wealthy population saw that and said, well, they're going to be looking to us to pay for this, right? And so I think during 2020 and 2021, there was a lot of wealthy Europeans that started to move to Dubai, and a lot of people from other countries as well, right? Were starting to move to Dubai because of the freedom that you had with COVID, and that already sort of started the uptick, right? Now you add on top of that Singapore has been talking about things like wealth taxes. I saw another article that was saying that they're considering a 60% property tax on non-resident purchasers of real estate. And so I think you see a lot of people looking at Singapore not as bullish anymore. We're starting to see some family offices and funds and individuals come from Singapore to Dubai. The other country that used to be competition for Dubai was Hong Kong. I think with the this new Chinese security law, we're seeing a lot of wealth and individuals move out of Hong Kong to Dubai. Obviously, we had a big influx of Russians and Ukrainians given the war, and now that China's opened up again, a lot of the wealthy Chinese that have been locked down and unable to travel out of China during COVID, they're all looking at Dubai as a place to resettle, to have that not happen again, right? And so I think Dubai is really sort of the only tax advantaged country of that. It used to be Dubai, Singapore, Hong Kong. Now it's just Dubai. And the other thing that I think Dubai offers that a lot of people don't know is, Dubai has 137 tax treaties. That's more than Switzerland. And when you look at Singapore, when you look at Hong Kong, I mean, it's been a long time since I've looked, but I seem to remember Hong Kong had like 12 tax treaties or something, right? And so when you start looking at jurisdictions to base a multinational business out of, Dubai makes a lot of sense, right? I mean, because you're able to repatriate a lot of the profits, in the form of dividends from subsidiaries at a pretty cheap rate. So I think I'm very bullish on Dubai.
I hear what you're saying. The challenges in Hong Kong is self-evident, and Singapore it's super expensive. The threshold for the family office benefits has been pushed up pretty high, and because of the influx of people from mainland, from Hong Kong, from Taiwan, real estate, my rent doubled or whatever the case may be, and I have it easy. But having said that, in Dubai in particular, not in the other Emirates, but Dubai in particular, again, real estate is going up, but also banking is being discussed as a challenge. What are your thoughts on banking in the Emirates?
Yeah, I mean, look, I think that banking has I think it's eased up a little bit. I think, when I first got there 8 years ago, banking was fairly easy to get. I think, because of being on the EU blacklist and being gray listed and things like this, that they did a pretty hard correction where banking became very, very difficult. I've seen it ease up a bit now. Banking's becoming easier, but it's still not easy, right? I mean, you still need to jump through a lot of KYC hoops. In some cases, depending on the type of business, they want fairly high minimum balances, or they want you to make personal investments, with the bank in order for them to open the company accounts. It seems to me that there's sort of a policy that you need to be a resident now in order to get banking. But I'm seeing it ease up. I mean, I think that they've come to realize that you can't be a true financial center if people can't get banking, right? So I think I'm not seeing a lot of people get accounts denied. I mean, it might take 30 days, 60 days to get an account open, but in most cases, we are seeing the accounts get opened.
Okay, that's fair enough. Now, going back to okay, where do you set up a company? What are your, I mean, obviously there's a wide array of factors, but what are the key factors you use in counseling your clients as to where you should establish, which jurisdiction you should establish your company?
Well, I mean, I think that's it's a very open-ended question, much
Mm,
like, if you're going to move out of the United States or move internationally, I can go anywhere. Where do I go, right? I
yeah,
mean, it
yeah.
depends on a lot of factors, right? So,
Hmm.
for example, how is that, like we're talking a little bit about the US, right? How is the jurisdiction going to be viewed internationally, right? I mean,
Hmm.
if you go to like a super tax haven jurisdiction, and I'm not going to like
Hmm.
name names, but if you go to, a super
Yeah.
tax haven jurisdiction, you're going to have
Hmm.
problems getting banking. You're going to
Hmm.
have problems and even if you can get banking, you're going to have problems transacting business, right? If you're trying to wire, if you have a client in Europe that's trying to wire you money to a bank account held by, a company that's from a blacklisted jurisdiction, or even a jurisdiction that maybe reputationally isn't so good, that's going to be
Hmm.
problematic, right? So I think
Hmm.
you need to look at um, what this company is going to be doing. Where is it going to be receiving income from? Is it going to be a trading company?
Hmm.
Is it going to be a holding company? What is the availability of banking going to be? Are there going to be economic substance requirements that requires that company to be operated from within that country, which
Hmm.
means that you need to have premises and personnel there? Um, are tax treaties necessary, right? If it's a holding company and you need to be repatriating dividends or interest or something like that, do you need tax treaties to take advantage of? Or do you need the provisions of, the permanent establishment provisions of a tax treaty to protect your company for contacts that it has with a treaty partner country, right? So I think that
Hmm.
those are all things that need to be considered when
Hmm.
thinking about where to set up a company. And I think also, just from a perception standpoint, you need to look at where the owner operator of the company is
Hmm.
going to be, right? I mean, it looks
Hmm.
a little bit strange to banks and tax authorities and everything else if you live in Germany and you're running a company from the Cayman Islands, right? I mean, it could be a
Hmm.
completely legal setup,
Hmm.
but it still looks a little funny, and might draw questions. So I think you also need to look at it from a perception standpoint of, what kind of fits with the picture that you want to show.
Yeah, and that is definitely true. Too often I have people, approaching us via the website or whatever, and they have these exotic jurisdictions, and I use in air quotes, so jurisdictions that are reputationally challenged, as you
Yep.
mentioned, and they are, they seem to be partial towards that without understanding the consequences of it, and
For
the
sure.
banking, the questions. So yeah, those are indeed key considerations. So it's not just about Googling and looking at the lowest tax and then that's your answer. No, there's a
Yep.
wider array of questions to consider. Okay.
And I mean, I think one of the big things
Mhm.
that people miss now is this, the economic substance regulations, right? I mean, pretty much
Mhm.
every zero tax jurisdiction has economic substance regulations that require that the core economic or the core income generating activities of the company
Mhm.
are done, but from premises and with personnel located in that jurisdiction. And even
Mhm.
if you think in terms of a holding company, that the core income generating activities might be as little as a board meeting or two a year, right? But
Mhm.
if you don't have people locally there, that requires travel there at least once or twice a year or whatever to do these board meetings. And
Mhm.
I think that that's something that people often overlook, and overlook what the consequences are of not meeting those economic substance requirements.
Or if not, they need to prove, okay, where is the substance? Where are they actually located? Where are they paying taxes? So the whole
Yeah, for
idea,
sure.
I'm gonna set something up and pay no taxes nowhere. It's often a non-starter, really.
No,
Yeah.
it's so funny because I think, I don't know if you watched that show on Netflix, the Ozarks, right? Where
Oh
the
yeah.
routing all this money through Cayman companies and all these companies,
I don't
and
know how
opening
that
bank
works.
accounts. Yeah, opening a bank
Yeah.
account through a computer. And I think that people have a very um,
Yeah.
unrealistic view of how the
Yeah.
international world works, right? I mean, they just
Hmm.
think like it's super easy. You open a company, run money through it, you
Yeah.
don't pay taxes. Well,
Hmm.
that you even though it wasn't legal, you may have been able to do that 15 years ago, but
Yeah,
it doesn't work today.
definitely, definitely. Yeah, Ozarks. We could probably do a separate one when the next season comes out, because
For
that
sure.
is an interesting one from a business structuring perspective. But a lot of the conversation so much has rightfully been on banking. So how do you decide? And again, super open-ended question, but what are the factors one considers in determining where to bank for your company and for yourself personally?
Well, I mean, I think unfortunately a lot of it comes down to where you can actually get it,
Yeah.
right? I
Hmm.
mean, um, I mean, obviously, I think it always makes sense to do business with, the largest, most stable banks that you can, right? I mean, in order to protect your money on deposit there,
Hmm.
and to get access to good services and things like that. I think one of the things that we're seeing is, it used to be possible to have a company in one country and open a bank account in another country, right? Or to be a
Yeah.
resident of this country and open a bank account in another country. This has become almost impossible these days, right? I mean, most countries, now banks will only open accounts for individuals and companies that are tax resident in that country, right? If you're not a tax resident, your company's from somewhere else, are just not going to open accounts. I mean, I
Hmm.
think the only true international banking center left is Switzerland. I'm not aware of any
Hmm.
other country at the moment that actively opens bank accounts for companies and individuals that aren't resident in Switzerland, right? I mean, that's their, I think the banking is really their bread and butter, and it's the only country that I know of. I mean, anywhere else, you're going to need to be a resident, or the company's going to have to be a tax resident in order to open the accounts. I know that there are some banks in the United States that will open accounts, for non-residents or companies that are non-residents, but they're becoming fewer and fewer.
Yeah, I mean, in the US, at least the ones that my clients, bring to my attention, when I do a deeper dive into them, they're not really banks. Again, these are just the ones that I'm aware of. I can't speak for every single one. They tend to be technology platforms that sit
Yeah.
on banks. So then they make it quite clear in their very, very, very fine print, we're not a bank.
Yeah,
So, but yeah,
it's very much like a lot of these, like currency
yeah,
exchange houses or
yeah.
money transmitters, things of that
Mhm.
nature, that works as a pseudo bank, but not an actual bank, which
All right.
isn't necessarily so secure for your money.
Yeah. And but going back to Switzerland, given I mean, they seem to have violated their position, the historical position of neutrality. Well, it's been twice in the last decade or so. Once in terms of the US, that whole thing with the DOJ and Americans who were allegedly, violating or engaged in tax evasion. So there's that thing that started with UBS and just spiraled outwards and downwards. But also recently with the whole Russia-Ukrainian situation and, just basically blacklisting people for their passports. Given Switzerland's evolution, what are your thoughts going forward? Do you think its status will be what it is, or you think it's on the way down, or you think it's doing the right thing? What are your thoughts?
Um,
Yeah.
I mean, look, I think that I don't think it's going to damage Switzerland, right? I mean, I think, when you look at, for example, the UBS thing, they were helping people evade taxes in the United States, right? I mean, they're helping people break the law, which obviously
Mhm.
they're not doing anymore.
Mhm.
I think when you look at the Russia thing, I think most Swiss banks,
Mhm.
um, what they wound up doing was freezing the accounts of Russian citizens, but not actually closing them, right? Where I
Yeah.
think
Yeah.
most banks in most countries closed the accounts, was like, okay, money gone. I think
Mhm.
Switzerland, as much as possible, was trying to maintain the relationships that they can with their clients, hoping that in the future they'll be able to do business with them again. But
Mhm.
most of the banks didn't actually kick the clients out; they just froze the accounts. Um, Not sure that in the eyes of a Russian whose money is frozen, that's much different, but
Different. Yeah.
um, that's the situation. But I think that the advantage that Switzerland has is it's really the last true private banking center, right? I mean, it's really the last place that is offering international banking to companies and individuals that aren't resident there. So, you know, if you're the only game in town, it's going to be pretty hard to dethrone them. So I think that Switzerland will continue to be successful. And I mean, even if you look at, for example, what it takes to open an account, I mean, even if you're talking about opening an account, let's say for a Luxembourg company in Luxembourg, it's still easier to open an account for a Luxembourg company in Switzerland than it is in Luxembourg, right? I mean, the EU's, you know, fifth anti-money laundering directive just is so difficult, requires so much due diligence that you know, opening accounts in Europe, especially if you have a complex structure, has become super difficult, right? And I think that the Swiss take a much more reasonable approach and pragmatic approach to due diligence, and therefore, you know, it makes banking there easier than anywhere in Europe.
Okay, gotcha. Now, you mentioned earlier, and correctly so, that, you know, what was possible 15, 20 years ago is no longer possible today.
Yeah.
And when it comes to banking, especially, you looking at setting up bank accounts for individuals and companies that are resident in that jurisdiction. So as a result, for those of us in the international tax and structuring space, invariably, suddenly part of the conversation has to be around residency. So migration programs, whether they be investment led, so you have to pay golden visas or whatever, or non-investment led, where you can just apply for work permit and get it. So what are your thoughts on that space? Because it historically has been kind of, you know, it has had a dark cloud over it. There have been misunderstandings around it. What are your thoughts on investment migration versus non-investment migration options, generally speaking?
Well, I mean, look, I think generally investment migration is viewed, as you say, you know, I don't know if I'd go as far as saying there's a dark cloud over it, but I think that they are viewed more suspect by banks and tax authorities than you know, traditional immigration that's not through investment, right? I mean, most of the investment migration programs all come with a tax benefit, right? I mean, they're all sort of designed around providing people with some sort of a tax benefit in exchange for their investment, right? And I think that I think that you know, it's good business for a country to offer this, right? I mean, they're getting people to come in, they're getting economic benefits, the people are spending their money there, and they're not a drain on the system. But for sure, I think that, you know, banks and tax authorities view them as suspect. And I think that also, you know, you also have to be very careful though, if you're complying with the rules of whatever the investment migration program is though, it should still be okay, right? But you have to comply with the rules. I mean, just look, for example, at this whole Puerto Rico thing. I know that you know, Puerto Rico, as some people may not know, is sort of the only place where Americans can move and pay less tax because of its relationship with the United States. And so they had this rule that if you were or have this rule that if you're a Puerto Rican resident, you pay taxes at the Puerto Rican rates rather than the US rates, which are obviously much I'm So there was a lot of high net worth individuals, hedge fund managers, all this kind of stuff that moved to Puerto Rico to take advantage of that. If I'm not an expert on the Puerto Rico program, but from what I remember, in order to be, you know, qualify for the program, you needed to spend 183 days in Puerto Rico. I think a lot of people played pretty fast and loose with those rules. I know that this is one of the things that the IRS wants to really focus on and look into. And my guess is that they'll probably find quite a few people in violation of it. So I think if you do an, you know, sort of investment migration program, you need to strictly comply with the rules of how much time you're required to have and whatever else the criteria are. But I think in general, you know, a normal migration as a not through investment is viewed in a more favorable light than the investment migration programs.
Yeah, Puerto Rico, we did have someone, an accountant from Puerto Rico, and he was going through in detail what, when you say people have been paying a little bit fast and loose with the rules, I mean, you're understating it. People have been trying to abuse the system. And
Yeah,
definitely from the announcements, the public announcements that the IRS has made in videos, as well as on their website, all these updates, it's definitely a priority. But then, I'm just reflecting on what you said earlier. Like a lot of the investment migration programs are built around some sort of tax benefit. But when I think of, for example, the US, you go in an EB-5 or whatever, but there's no real tax benefit. You're all in, right? Or
yeah,
Austria, which seems to be the only one in the EU that the EU is comfortable with. They don't pick on them, as opposed to all
yeah.
the Southern European ones. And again, no tax benefit on Austria. So that leads me to my next question, I guess. These golden visas, obviously they've been in the news what's happened with Vanuatu and certain Caribbean islands having to change, or they've been threatened in some veiled way. What are your thoughts on the whole golden visa landscape, generally speaking?
Well, I mean, look, I
Mhm,
think, like I said, I
mhm,
think they're gonna
mhm,
they're gonna continue to exist
mhm.
because countries receive a lot of benefit from it, right? I mean,
Yeah.
they get the investment, plus they get the people there spending money without being a drain on the system. And a
Mhm,
lot of these countries don't really have a lot of um, other ways of raising revenue, right? I mean, especially
mhm,
when you start looking at the islands. So
mhm,
I think that the golden visas are definitely going to continue. Um, I think that the international community will continue, the let's say the group of tax cartel nations is going to
mhm.
continue to put
Yeah.
pressure on because they're fiscally irresponsible and they're desperate for money.
Mhm.
So they obviously don't like it, right? I mean,
Yeah.
so like I
Mhm,
said, I think the golden visas will continue. I think it's
mhm,
going to be important for anybody that wants to take advantage of a golden visa that they strictly comply with the rules of it.
mhm,
Um, because whatever country they're leaving is going to try to claw them back, right, as much as they can
mhm,
to try to
mhm.
tax them.
Yeah, and I like the cartel, the wealthy countries who are having challenges right now. I mean, you're absolutely right. There's not only blacklist, but at the OECD or the EU level, but there are blacklists within each of these smaller nations. And when I think of one country that's been picked on recently, I come back to the UAE, right? And if you're in Spain and you've been tax resident in Spain for X number of years and you move to Dubai, you have to continue paying taxes in Spain under these fallback rules. So I'm wondering. So recently, I'm sure everyone is aware, at least that pays attention to this space, that there's been the imposition of a 9% corporate tax. Not in everyone on specific circumstances can trigger it. Do you think that this is the beginning of a change in the UAE's tax landscape, or is it a one-off? It's done, it's dusted, there's nothing else to see here. We can move on.
Um, No, I think it's going to evolve, right? I mean, I think
Mm,
the
mm,
UAE is trying to tread a very fine line between
mm,
being an attractive financial center and business hub, and obviously being an attractive business center and financial hub
mm,
requires tax advantages, right? I mean, you have to
mm,
be. I mean, this is one of the things that always sort of gets me with
mm,
Europe,
mm,
that they're always trying to somehow grow their economies and stimulate business and all this stuff
mm,
while subjecting everything to very heavy taxation. I mean, it's proven throughout history that if you want to stimulate the economy and attract businesses, you need to
mm,
lower taxes, right?
mm,
Um, and so I think taxes is obviously one of the things in the UAE that's very attractive about it. But they have to tread this fine line, like you were saying about blacklists and gray lists and all this stuff, where if they don't have any taxes at all, they're not going to be very successful as a financial center because they're going to be blacklisted, they're going to be gray listed. You're not going to be able to transact business from the UAE
mm,
with the rest of the world in a very efficient, reliable manner. And so I think that they're trying to ride this fine line of staying attractive to businesses who are looking for global headquarters and places to do business, but also keeping the international tax cartel community happy so that you can actually do business from there, right? And so I think for the time being, it's, this is done. There's nothing more to see here. But look, things are constantly evolving, right? We don't know what the next step of the global tax deal is going to be, right? I mean, we have this big OECD global tax deal that only applies to, the biggest companies. But like with anything, right, the threshold's going to come down. I mean, at some point, it's going to apply to all businesses, right? And I wouldn't be surprised if at some point we saw a global minimum individual income tax, right? That's going to apply to individuals. And you'd probably sell it the same way, right? It applies to billionaires only, and the next thing you know, you make 100 grand, you have to pay minimum tax. And so I think that as the international tax landscape evolves, so will the UAE's tax system, right? I mean, they're gonna have to continually ride this fine line of trying to stay attractive to high net worth individuals and businesses, and at the same time keep the international tax cartel happy, so that you can actually do business from there, right? So I think for the time being, I don't think we're going to see anything new jump off in the next couple of years, probably. But I think for sure it is going to evolve as the international tax landscape evolves. It's going to have to.
No, absolutely. I completely agree with you. Now, we've spoken a lot about taxes, but also, I mean, moving in tandem with taxes is the issue of transparency, right? So transparency is one perspective, but anti-privacy is another perspective of the same initiatives. Obviously, we have FATCA, but we also have CRS, automatic exchange of information, and a whole bunch of other bilateral and multilateral agreements. What are your perspectives on those?
Well, I mean, look, I think most of it, not all of it. I mean, FATCA obviously and CRS are tax initiatives, but I think a lot of like these beneficial owner registers and a lot of this transparency stuff and anti-privacy stuff that is happening, a lot of them are selling it as, the governments are mostly trying to sell this anti-money laundering and anti, terrorist financing. But the reality is, there's currently a war on wealth. I mean, it's all about taxes, right? In my opinion, there's a war on wealth, and you can't fully tax wealth unless you know where it is and you can track it. So to me, all this anti-privacy stuff has one goal, which is to be able to identify wealth, track it, figure out who owns it, and tax it. And I think that's going to continue.
Okay. So in terms of advising clients, is it like, don't bother fighting it, just get on board, be 100% compliant? Or, because I've spoken to other advisors who've taken a different position, if you choose to fight it, these are the jurisdictions that are not playing ball. So you can perhaps look at structuring your way using those jurisdictions. Obviously, the infrastructure is not as developed and you'll have to compromise. But if you want to exit the matrix, this is what you can do. Do you which perspective, or do you embrace both?
So I'm in the first camp, right? I'm
okay.
Comply and deal with it. I mean, most of as we said earlier on, I mean, most of my clients are high net worth individuals and ultra high net worth individuals, and they need to be able to conduct business. They need to be able to move capital internationally freely. They need to be able to do banking in different jurisdictions, set up companies in different jurisdictions. They need tax treaties. They need all these different things. And that's just not possible if you're taking advantage of these few, let's call them non-compliant jurisdictions, right? I mean, not that there's something illegal about doing business in those jurisdictions. It's certainly not breaking the law, but it just makes conducting international business almost impossible, right? So I think that you're much better off complying. Obviously, I think privacy is very important. I definitely advise against setting up companies, for example, in countries that have public beneficial owner registers, right? I mean, you want to try to keep it to private beneficial owner registers. And there's enough countries with private beneficial owner registers that are still internationally accepted that, you know, to me, that's more advantageous. So I'm definitely in the camp of, you know, you just have to comply with it and deal with it and try to structure your affairs within, you know, that compliant framework, because otherwise you're just not going to be able to do the financial transactions that you need to do.
Yeah, essentially you're locking yourself out of the international system.
For sure.
Yeah. Okay. So obviously this is a very complex field. There are lots to consider. Our team deals with compliance, so actually doing the returns, but complex planning, we hand them off to firms like yours. How is it that someone can choose the right tax person team for advanced international structure and asset protection, succession planning, like what you do? What's the right way to make that decision?
So look, I think the two biggest things that you want to look for in an advisor are one, that they're solutions oriented, that they're not trying to sell a specific product or a specific structure, right? That it's somebody that's going to analyze your situation and try to find the right solution for you. I think the other part of it is that you want to find an advisor that has a global perspective, right? I mean, if you're a multinational person, you know, somebody who's using flag theory, for example, you're going to have, you know, maybe citizenships in this country that's going to have a, you know, potentially a tax aspect to it. You're going to have residency in this country. You're going to have businesses in this country, assets in this country, so on and so forth. And you need somebody that's going to analyze all of that and try to figure out what the best structure looks like, right? Where do we need the companies? Where do we want the trust or foundation? Where do we want your residency? How do we want this whole thing to work, right? And then find the jurisdictions and the structure that work best for you. I think, unfortunately, a lot of the people out there that, you know, sell themselves as advisors are not really advisors, right? They're entity salesmen or structure salesmen that are going out there and saying, I have this package solution, I have this structure, buy this, and it solves everything, right? And then that's never the case. And then I think the other part of the problem is, you know, you have a lot of what I would call single jurisdiction advisors, right? Like if you're a lawyer in Switzerland, for example, and a client comes to you with you know, their situation, you know, they're probably going to try to fit you into some sort of a Swiss solution because that's what they know and that's how they make money. And so I really think what's important is you actually kind of want to separate the implementation of your structure from the planning, right? You don't want to go to the same guys that are going to set up the companies and set this up for advice, right? Because they're going to try to give you advice that fits with what they can sell. So I think that when choosing somebody, you know, you really want to choose somebody that is really only selling advice, and you want to try to ask them questions to make sure that they're solutions oriented and that they kind of understand the global landscape, the relevant jurisdictions, and what's out there rather than a single jurisdiction.
There's a good point, especially the idea of divorcing implementation from planning, because you know, there's so many, especially in the online space, there's so many influencers who, you know, everyone has a comfort zone. So there's some people who claim to be international, but they only sell Dubai. That's it, really. Or who only sell Belize or whatever the case may be. So yeah, that's quite helpful. Thank you for that. In terms of asset protection strategies, what I mean, again, super open-ended question, but generally speaking, what are the tools in the average toolbox, and what should someone be looking for as they try to find someone to help them make that step?
Yeah, so I mean, look, I think I think a lot of the same stuff applies, right? I mean, I think when you start thinking about asset protection, I think probably the two most common structures that are the backbone of any asset protection structure are probably going to be a trust or foundation, right? You know, I usually would recommend that you set up your trust and foundation in a jurisdiction that is not your country of residence, right? Because your country of residence is probably where any liability would arise. So, you know, I mean, ideally in an asset protection structure, you probably want your trust and foundation structure in you know, another country, and it's banking in yet another country, right? To kind of separate it out a bit. But yeah, I think trusts and foundations are probably the best asset protection tools. You need to find an advisor that really understands them well, and then you need to look for a jurisdiction that is gonna suit your needs, right? I mean, different people have different priorities, and so you need to look at which jurisdictions have the laws that are going to benefit you the most and kind of tick the boxes for what you want to achieve.
And I know you personally and through your company, the Esquire Group, there's so many, that seems to be an area of specialty for you and your team,
Yeah.
because I watch everybody you've done, and so many of them are built around trust and foundations. You have a lot of content. So that's an area of specialty for your team. Am I correct in saying that?
Yeah.
Yeah.
Right.
I
mean, yeah, sorry, go ahead.
No. So I was just wondering, just as an overview, because again, going back to the Ozarks, there's so much misunderstanding about you. People contact me, and I'm sure they do you. Hey, I want to set up a trust so I can hide all my money, or so that I won't get taxed. Can you help me? So basically, really helicopter view. What is a trust versus what is a foundation, and how are they useful? Just very high level.
So I mean, the basic premise, I think, of both and how they protect assets is very similar, right? I mean, you're taking assets out of your own name and putting it within this trust or foundation structure. And by doing so, you're essentially accomplishing two things. Because you no longer own that asset, obviously, depending on the jurisdiction, you generally would not be liable for the taxes generated by the assets put in the trust or foundation. Now, that's not the case in every country, right? I mean, if you're an American and you put assets into a foreign trust, you're still going to be taxed on it because of how the U.S. taxes foreign trusts created by Americans. But in most countries, you would not continue to be taxed on the assets placed in the trust or foundation. And then the asset protection part of it is, because you no longer own those assets, if you get sued or become liable for something, those are no longer going to be accessible, right? But there's a lot that you have to consider when setting up the trust or foundation, because a lot of times people who are setting these things up, obviously they're transferring their wealth to it, right? So they want to maintain a lot of control. But the problem is, if you maintain too much control, then tax authorities are going to treat the assets like they're still yours. Or, for example, a court, if you had liability, could say, well, they can just order you to revoke the trust, for example, or to distribute all the assets to yourself and pay off this judgment. So there is a very balancing act there between how much control you can maintain while still receiving these benefits. And I think one of the when you start thinking about taxes, I think one of the biggest benefits of trusts and foundations is that these can be multi-generational structures, right? So if the idea is, if you think about it, if you don't have a trust or foundation, let's say you're an ultra high net worth individual, right? So you leave 100 million to your heirs, you pay estate taxes, right? Now your heirs die and they leave it to the next generation to pay estate taxes again. In 2 or 3 generations, the wealth is gone, right? And that wealth is then vested in those people, which means there's no asset protection. If there's any wealth taxes or anything like that, they're going to have to pay that. They're going to have to pay taxes on the income generated by that wealth. Whereas if we put those assets in a trust or foundation, we get a lot of benefits, right? Even for the beneficiaries. Because you could set up a trust or foundation, for example, and say, myself and all my bloodline heirs are beneficiaries. So that means your kids, your grandkids, your grandkids, and so on and so on. And what would happen is, generation after generation, the assets stay in the trust or foundation. And those beneficiaries can receive benefits, but they never actually own the assets. And that has a lot of benefits, right? I mean, one, assuming that the trust or foundation is set up in a tax-free jurisdiction, which it likely would be, the income is accumulating in there tax-free. Obviously, when the beneficiaries, depending on where they reside, get a distribution, there could be tax, but you don't have tax within the structure. Also, because the assets are never passed from generation to generation, you don't have the estate taxes. You don't have the wealth taxes. And more importantly, and this is something I think a lot of people don't think about, is because these beneficiaries don't own these assets, they don't need to think about what countries they're going to live in as much, right? So if you have 20 million in assets, you need to think, okay, are there wealth taxes? Are there inheritance taxes? What are the income taxes? But if it's within the trust, you don't really have, there's no better way to say it, but you're not burdened with the wealth, right? I mean, you can kind of go where you want. You pay taxes on the distributions, but you don't have to worry about that wealth being attributed to you or that income being attributed to you in tax. And likewise, it also provides asset protection for the beneficiaries, right? If they get sued, the assets are in the trust or foundation, right? They're not accessible. If they get divorced, not their assets, not at risk. So I think that the trusts and foundations are by far the pillar of any asset protection strategy.
Right, and I encourage anyone who's watching this video and they want to get more details, to just do a search on YouTube for Esquire Group, Jimmy Sexton, and I spend an inordinate amount of time online, and I've not seen any advisor go into the detail that you have, and it's made freely available. It's completely online, so I encourage everyone to take a deep dive into what could be a Pandora's box. As we go onto the final stretch and kind of wrap up. So you mentioned that, again, the exception is that if you're American, right, because of the way the US code works, you're still exposed. So then that leads to the next question about expatriation or surrendering your green card. Obviously it's a super personal decision, right? There's a lot of stuff to consider. But generally speaking, I mean, seeing that you've gone through the process and no doubt you've advised many people on it, high level, what does one consider in making such a life-changing decision?
Yeah, I mean, I think a lot of people, sometimes focus on sort of the immediate things that impact them, right? Like, not being able to get a bank account or not invest in certain things or, something like that. But I think, I think where you need to start is, one, are you okay not having the right to reside in the US anymore? Or potentially even be able to visit the US anymore, right? Because you have no right to be able to enter the US anymore. So is that okay for you? Is your family okay with that, right? If they're going to be expatriating too, or even if they're not expatriating, that you might not be able to go back to the US, right? Is your family okay living somewhere else? Is everybody going to expatriate, right? Or is it just going to be one person or select people? You need to think about things like, are you going to be able to conduct your business from wherever you're going to be? How's that going to impact your business, right? If you have any professional licenses, is not being a US citizen going to, influence that? Or if you have a business that's regulated, does that require US citizenship? Do you want the ability to pass on US citizenship to your kids, for example? Like you had mentioned earlier, do you want to have the protection of the US, right? To be able to have access to their embassies and so forth. And I think one important question is, have you ever lived outside the US before, right? I mean, I had an instance one time where, a guy had never lived outside the United States, but he was just, opposed to politically what was going on in the US, and he was just hell bent on getting out. And he got out and he regretted it, right? And so I think that it's really important to know what you're getting yourself into and that you can live with it, right? And I think once you've sort of considered all of those things, and if it's still something that you want to do, then you can look at the process.
Yeah, and of course, the issue of what citizenship do you then adopt? Because when I look online, obviously what's being promoted would be, the faster options, Caribbean, Vanuatu, whatever. But those come at a price. Most of my clients go for European passports, Singapore, Australia, like a tier, what we would describe as a tier 1. But I've heard one of the most prominent influencers in this space, I mean, I won't call their name, but he was a US citizen. He obviously gave it up, but he was describing, he hosts this huge conference and he switched it from one jurisdiction to another. And I was wondering as to why. And he put out a video last couple of weeks. So we're recording this at the end of July. So it came out in July. And he's basically talking about over 3 years, 3 times he tried to enter Mexico on one of the, I assume what would be a lower tier passport. So a visa may or may not have been needed, etc. And he was detained first time for an hour, second time for 2 hours, and third time for 3 hours. So it's kind of like, wow. I mean, he didn't mention it, but I wonder in a situation like this where suddenly you brought into this world where you have to navigate visa issues and they look at your passport with suspicion because it's not a top tier one, and you pulled into back rooms and interrogated. Does that lead to buyer's remorse? So do you have a position on that, like what passport one should be looking at coming from a tier one jurisdiction like the US?
I mean, look, I think I think if you give up a tier one passport like a US passport, and then you're relying on a lower tier passport, it's going to be a huge adjustment, right? I mean, on a US passport, you pretty much hop on the plane, go wherever you want without a visa, it's no problem. But I think a lot of people don't really consider how much work it is to deal with these visas and how difficult it is to get in some places, right? I mean, how long the visa process takes, even if you're able to get it. And that can have a huge impact on just your quality of life, if not your business, right? So I think that if you're going for a second passport, I mean, obviously going for a tier one, a European passport, something like that is definitely the way to go. That's not always possible for everybody. And I'm not saying that you shouldn't expatriate if all you have is a lower tier passport, but I think you need to give it some strong consideration about how that's going to impact your life.
Absolutely. And in terms of expatriation, we've spoken about the qualitative factors deciding on choice of jurisdiction, passports, etc. But what about the tax planning process? So
Yeah.
again, helicopter view, how would you recommend approaching tax planning, pre-expatriation tax planning for US exposed persons?
So, I mean, look, I think that, as you know, there's sort of two categories of expatriates, right? There's the non-covered expatriates, which means that you can essentially expatriate with minimal tax consequences, and there's sort of no negative tax implications that trail you, right? I mean, you kind of expatriate, you're more or less treated like any other foreigner would be. But if you're considered a covered expatriate, then you have an exit tax, and then possibly more importantly is, in addition to the exit tax, any gifts or inheritances given to US persons are going to be subject to gift or inheritance tax at the highest tax rate then in effect, right? So if you expatriate, you're a covered expatriate, let's say your kids are Americans, if you leave your inheritance to them, they're going to have a huge estate tax bill, right? So you don't want to be a covered expatriate if you can avoid it. And then being a covered expatriate means you're not tax compliant for the last 5 years. You have a net worth of more than $2 million, or your average income tax liability for the last 5 years, I think it's almost $180,000 now.
Correct. Yeah.
I think I haven't seen a lot of cases where that average income tax has been an issue. It's usually the net worth and the tax compliance, right? The tax compliance is usually fixable fairly easily. So to me, the pre-expatriation tax planning looks kind of like, first, is there an exception to covered expatriates you qualify for, like the born dual national exception, for example? Or is there a way that we can get your net worth under $2 million to get you recategorized from a covered expatriate to non-covered expatriate? So to me, that's the way the pre-expatriation planning looks like.
Okay, gotcha. Thanks a lot for that. So we touched on it earlier, but let's return for just a little deeper perspective on the role of online influencers. Obviously, they play a role, but how important is their role? And I guess caution in all things is advisable. So how cautious one should be as a customer, as a potential client, in evaluating people who do things online like you and I do.
Yeah. Look, I don't want to I think sort of as a blanket statement, obviously this doesn't apply to everybody, but I think
Yeah.
a lot of the most successful influencers are successful marketers.
Absolutely.
And they're out there usually, they're good at marketing. They sort of latched on to selling passports, for example, and they don't really know their goal is to sell passports, right? They don't necessarily think about how that's going to impact their client's life, what the tax consequences are going to be, whatever. They just want to sell passports, right? And they're only going to tell you what the advantages of that are and not the disadvantages, right? So I think that unfortunately, a lot of the influencers are better marketers than anything, that they're not really true advisors. They're salesmen trying to sell a product. That's certainly not true of all of them, but that's my impression of most of them. And I think that you have to be very aware of that, right? I think anytime you talk to somebody and all they're doing is telling you the upsides of things without going into detail with you about the downsides, you're probably talking to a salesman, and you'd probably be smart to avoid them.
Right. And of course, the whole principle that one size fits all. I mean, obviously, as practitioners, we know that's not possible, but as a salesperson, you want to package a product that's 100%. Easy to communicate and sell. So therefore you try to put everyone into this one narrow category, which is impossible. And then of course you mentioned earlier the importance of perhaps separating the tax planning from the implementation of the structure
100%.
Just to make sure. So okay.
Yep.
So I think that's it. Thank you very much. We appreciate your time
My
over
pleasure.
the past hour and a half. If someone wants to find you, what is the best way to get hold of Jimmy and his team?
EsquireGroup.com.
EsquireGroup.com, as simple as that.
Easiest way. Simple as that.
Jimmy, thanks a lot. Appreciate it. And we'll see you next time.
My pleasure. Always a pleasure, Derren.
Thank you. Bye-bye.
See you.